Good afternoon, and welcome everyone to today's webinar, Advancing Lending in Indian Country with HeritageOne for Manufactured Homes, hosted by Freddie Mac. We are thrilled to have you join us for this important conversation about expanding homeownership opportunities in Native communities through our innovative HeritageOne initiative. At Freddie Mac, we're committed to providing affordable and sustainable housing solutions. And today, we'll dive into how HeritageOne is helping to advance lending for manufactured homes in Indian country. I'm excited to introduce our distinguished speakers who will guide us through today's discussion. We have Kimberly Carr, Affordable Lending Manager, and Dennis Smith, Affordable Lending Senior Manager at Freddie Mac. Kimberly and Dennis bring deep expertise in affordable housing strategies and as key leaders in our efforts to provide financing solutions tailored to meet the needs of Native American communities. Together, Kimberly and Dennis will provide valuable insights on how HeritageOne is addressing housing challenges in Indian country. Thank you again for being here today. We look forward to an innovative and engaging discussion. Now I'll turn it over to Kimberly and Dennis to get us started.
Thank you so much, Eric, for that great introduction. Just one piece of housekeeping. We have a lot of content to go over today. So at the bottom of the screen, you will notice there's a Q&A session. If you click on that and expand it, it'll allow you an opportunity to submit your questions. We will have behind the scenes a couple of our staff helping to answer those questions in real time. And if the session time permits, we will answer those questions at the end. And if not, we will make certain that we send out those questions with the responses to everyone in attendance today. So Kim and I are excited today to be talking about HeritageOne specifically for use with manufactured housing. We're going to go over some key topics such as why choose HeritageOne. We'll review the product requirements for the HeritageOne product and look at the manufactured housing component specifically. And then we'll provide you additional tools and resources to help you in your journey to help more Native Americans become homeowners. So probably a great place to start is why choose HeritageOne? So Kim, if you might want to give us an overview of what HeritageOne is and how the product came to fruition.
Sure. So historically, the only real options in Indian country have been HUD 184s and certain VA products. And we wondered, what about the borrowers who don't meet that criteria? What's offered for them? So we developed HeritageOne as a conventional mortgage product to support members of federally recognized Native American tribes in Indian country. The product also addresses need for greater access to mortgage finance options in this community because no one wants to have just something they're forced to have. So we wanted to offer a conventional product that gave a little bit more variety to home ownership options on tribal lands. We can go to the next slide.
Yeah, so maybe talk a little bit about some of those benefits to the borrower and what's a little bit different about the other offerings and why HeritageOne is so great.
Sure, love to. So let me just start off by saying you can gain more affordable home financing options. Like I mentioned before, historically on tribal land, tribal Indian country, there's a long history of long-term renting, and there is a restriction on what is offered in tribal areas. So one, gaining more financing options, a variety, because who wants to just go to one store when they can go to several, right? You can attain homeownership with the conventional mortgage solution. And what that means is not only just variety for the borrower, but it also has a security for the lender as well. You can make a down payment as low as 3% on the home's sale price. You can use the funds from a variety of sources for the down payment, reserves, and closing costs. Borrowers can receive a credit to offset appraisal costs, which can be costly, especially considering in Indian country there is a remoteness, a travel cost, and a lot of appraisals. So providing an appraisal cost and offset actually helps to reduce some of the fees that would be associated with home ownership. And the last one I want to emphasize really is Attaining homeownership is one thing, but sustaining it. So we provide access to homeownership education so that first-time home buyers who are just not familiar, or maybe it's been a long time. So they have that information to not only have a home, but to make sure they sustain it, know what they're getting into, to be prepared to keep that home for a long time.
That's fantastic that here at Freddie Mac, we take a holistic approach to the borrower. And it's not just about them getting the keys to become a homeowner, but it's giving them the tools to be successful and sustain that home ownership. We talked a little bit about those borrower benefits, Kim, but are there some specifically for lenders?
Absolutely. So first off, not only does this expand your business, but it grows your business because this can open up a brand new avenue of revenue that was previously untapped. Some people are just unfamiliar with tribal lending or they don't know how to tap into it. The good news is that here in the last few years, since the idea and launch of our product, we've gone to great lengths to partner with Native American tribal authorities, communities, coalitions, organizations. So not only can we help you expand and grow your business with this offering, but we can also help connect you here at Freddie Mac with some tribal partners and entities who are looking for avenues to increase that variety of homeownership opportunity. The next is standardized mortgage guidance. So there's a common misconception that tribal lending is just too complex. With the HeritageOne term of business, you have access to standardized mortgage guidelines and technical assistance that we can help you to navigate some of those complexities in lending in tribal areas that may come up. You also have a variety of options because HeritageOne is not restricted to one structural or transaction type. You can meet some market demand with various property types, including condos, manufactured homes, which we'll talk about in depth a little bit more later, new construction, renovations, and ADUs. You can combine that financing with some of our products like Choice Renovation, Home Possible, Green Choice, and Affordable Seconds to cover down payment. So those are just a few. This is just a highlight, but this is just a real brief overview of what some of the main key lender benefits that we think HeritageOne can provide for you.
And I know today we're specifically going to talk about some of the differences for manufactured housing, but I think it's important that we talk about some of those things that remain standard, such as the eligibility for Heritage One mortgages. So, can you talk a little bit about borrower eligibility?
Absolutely. So first and foremost, HeritageOne is for members of federally recognized Native American tribes. What that means is that the tribe must either be on HUD's latest Section 184 participating tribes list, or they have to enter into a memorandum of understanding with Freddie Mac. So that means if they are not on the 184 list, that doesn't mean that all options are lost. It just means that they have to take a different route with us and enter into a memorandum. For borrowers to be eligible, he, she, or they must be an enrolled member of an American Indian tribe or Alaskan Native village. We use tribal membership cards to be the documented proof of membership. If that is an issue, you can talk to your account manager, but we haven't run into an issue with that yet. At least one borrower has to be an owner occupant, which means at least one of the people taking out the loan must live in the home. It must be their primary residence. And one more thing to note that we've run across a couple of times so far is you do not have to live within the same tribe you're a member of. For example, intertribal marriages and partnerships can happen, but you do need to be a member of a tribe and you do have to have tribal approval to live on their land if it's required by their tribe.
That's some great insight. Now, you talked about people have this perception that lending on tribal land is a challenge. And I think some of that just comes down to the different land types and land structures. So maybe if you talk a little bit about those, and then we'll start to get into some more about the manufactured housing component.
Absolutely. So we really accounted for all the land types with HeritageOne: tribal trust land, allotted trust land, and fee simple. Those are the major land types when you're talking about Indian country. The eligible property types could be a 1 to 4 unit primary residence, a manufactured home, a condo, choice home, a planned unit development, a property with an ADU. The major thing here to remember is that the property just must be located within a tribal area of an eligible Native American tribe that we talked about earlier.
So that's great to talk about the borrower eligibility and the tribal membership portion of it. Do we want to talk a little bit about specifics for Heritage One, such as some of the income components, what the loan type offerings are, et cetera?
Sure. So the big thing here, the big allure here is there's no income limits. There's no area median income limits, or what we call AMI, on this product. We wanted as many tribal members as possible to be able to take advantage. There are a lot of opportunities for all sorts of programs for 80% AMI, but sometimes that misses out on what we call the missing middle, that 100% to 120, 140. So we wanted as many tribal members as possible to be able to take advantage. Also, with home ownership and home prices going up, we wanted to make sure it was still affordable. So the LTV ratios are still 97%, which is similar to our home possible and our affordable mortgages that we already have. But if it's secured by a one-unit property, including choice home, you can have up to 97% LTV and 95% LTV for mortgages secured by a 2 to 4 unit or a manufactured home other than choice home. Some of those occupancy requirements we already talked about, just at least one borrower must occupy the primary residence. But an important thing to note here is also that a non-occupying co-borrower is allowed. So if you have, someone trying to help you secure the mortgage, that is absolutely okay, as long as there has to be one person that's on the note that is actively going to live in the home as their primary residence. You can also have up to 2 finance properties, including the subject property. So if you're looking to sell a house and getting to another one, that is absolutely okay. One thing I do want to point out, though, is that this is a loan product advisor except for our underwriting. Although they may be manually underwritten, having LPA accept provides a little bit more sense of security. It gives you a little bit quicker turnaround because our loan product advisor, which is our underwriting system, provides all of the feedback and requirements that you need to let you know if that loan is going to be accepted by us. So it provides a type of security. It is a fixed rate purchase, no cash out refi. You can have a no cash out refi or a purchase. Construction and renovation transactions are okay, as long as it's not a second home or an investment property. And right now, we're not doing co-ops for Heritage One, but as long as it's a fixed rate purchase or no cash out refi, you're pretty much covered.
So that's a lot of great information. One thing that we consistently hear, whether it's in the tribal space or off tribal lands, is that coming up with that down payment could be a challenge, right? The down payment and closing costs. Can you maybe speak to some of the things that we're doing through Heritage One to help with the down payment?
Absolutely. So one big thing is there's no minimum contribution from personal funds. Anyone who's moving to a home knows that's a big thing, right? So you're already moving, you're already out a lot of money, moving costs, and moving is expensive. The borrower contributions from personal funds are 0. You can also layer down payment. So gifts, grants, something from the tribe, even from your grandparents or your employer or the tribal authority, those are all okay to cover your down payment. Generally, there's also no reserves required unless it's something that is triggered by LPA, which is our underwriting system. I will say it is rare. We haven't seen it yet, but for the most part, there are no reserves required generally. Lastly, we have a flexible source of funds that are accepted. So again, we talked about just that low down payment, the 3%, but you can also use personal funds if you have them to cover that 3% as well. So we have a flexible list of funds of which you can have down payment assistance, but just know we can also layer multiple down payment assistance to cover some of that borrower contribution.
So that definitely helps those tribal members become homeowners when they have all that flexibility in the sources of funds and down payment assistance. Now, earlier you mentioned borrower education. Is that strictly for all borrowers? Is it first time home buyers? And then in those 2 to 3 unit situations, do we require any additional type of education?
Absolutely. So at least one borrower has to complete homebuyer education when all of the occupying borrowers are first-time home buyer. So if you're familiar with home buying and you're just, trading off into a new a new property, not required. But if you are a first-time home buyer, we do require homebuyer education. It may be provided by your native, like a native CDFI, or even the originating lender or seller in certain cases. Typically, our homeownership education cannot be provided by an interested party in the transaction or the originating seller. However, third parties are usually provided. I'm sorry, third party usually can help with that. We use a lot of housing counselors, a lot of tribal authorities or housing counselor networks. Like OWISTA has a large network of housing counselors that are tribal related. Um, One of the things here that I do want to make mention of is, if you're going to have a 2 to 4 unit, at least one of the qualifying borrowers must complete a landlord education program or have previous landlord experience. Now, that is something that is guide related. We don't have very many specifics on that, but if you have to be able to prove that there is some type of landlord education or previous landlord experience in order for you to qualify for that. And the reason we do that is because we want you to know what you're getting into and to be prepared for home ownership, not just to buy a home.
And I'm certain that there's also a lot of legal implications for being a landlord and renting out a property, and having to understand what those requirements are really fundamental in knowing what that borrower is getting themselves into. I know we talked earlier about the three different types of land. Can you maybe talk a little bit about tribal trust land and how it's a leasehold arrangement?
Sure. So for the leasehold agreements, a term of at least 25 years with an automatic 25-year renewal, that is the first and foremost requirement. It must expire at least 5 years after the mortgage term ends. And if necessary, it has to receive approval from the BIA, as applicable, to extend the term if need be, beyond the 25 years. Um, the lease agreement is, we have recommended but not required. You can use the HUD Section 184 standard lease form, but it is recommended but not required. But it has to be very, very similar in content. And Dennis, why don't I let you go into some of the additional requirements for manufactured homes?
Yeah, maybe that's a great place to start with a little deeper dive into manufactured housing. And maybe for those customers who aren't uh, quite familiar with the acronym BIA, that's the Bureau of Indian Affairs. And they help a lot with the recordation of the documents as well. So, in addition to those leasehold agreements that Kim just went over, there are some additional requirements for manufactured homes when on a mortgage, when that mortgage is on a trust land and that leasehold agreement is in place. First of all, it must be in a state that permits surrender of a certificate of title. So there are three different ways in which a manufactured home can be treated by the state and converted to real property. And we'll go over those in a few slides, and I'll bring this up again. But it must be in a state that permits surrender of a certificate of title. I'll also pause there and say that some states may just follow what they have prescribed for fee simple lands that are not on tribal lands, but some states may defer back to the tribe as their sovereign authority to be able to make that determination. So stick a pin in that, and we'll talk a little bit about some of those implications a little in the future. Although the HUD code has recently changed to permit 2 to 4 unit manufactured homes for HeritageOne, it must be a 1 unit dwelling comprised of multiple sections when on a trust land with a leasehold. So this is an example where single sections homes are excluded. And for the leasehold, this cannot include an accessory dwelling unit as the manufactured home or as the primary residence uh, when looking at those lease agreements. So maybe a good place to back up, Kim, would be to maybe define what manufactured housing is, because there's a lot of different type of off-site construction or factory-built construction. What is a manufactured home? So a manufactured home is built to or exceed the HUD code. So the HUD code is the National Construction and Safety Standards Act for manufactured homes that lives in housing and urban development, and they have oversight of that code. Prior to June 15th, 1976, there was no national code that covered factory built housing or manufactured homes. So we use that as kind of a definition. Anything that has been built on or after June 15th, 1976, that meets that HUD code, that is built on a permanent chassis, transported to the site, affixed to a permanent foundation where the wheels, tongues, and axle are removed, we consider that a manufactured home. A mobile home is any home that was built in a factory environment prior to the implementation of that national HUD code. And since that was unregulated at a national level, there could be some safety and soundness concerns. So we do not lend on anything built on or before June 15th, 1976. Well, you heard Kim mention Choice Home. Choice Home is our financing for what the industry calls a cross mod home. The cross mod home is built to the HUD code and meets all those requirements of being built on a permanent chassis, transported to the site, affixed to the permanent foundation. But some of the unique differences in a cross mod home is that it has features similar to a site built home, and the manufacturer will actually place a label on that home showing that it's eligible for choice home financing. And we'll go over those requirements here in the next slide. But I also wanted to address modular homes. Modular homes are built in a factory environment or off-site construction, but the difference is modular homes are built to meet or exceed the state, local, or regional building codes. They are installed permanently on the site, but they're typically not built on a chassis. They don't have the wheels, tongues, and axles. They're transported to the site on the back of a flatbed tractor trailer, and the crane is used to pick that module up and place it on site where the other modules of the home are attached, as well as the utilities. So how we define manufactured housing is literally that it is built to meet or exceed that HUD code. So choice home, oh, I'm sorry, we went the wrong way. There we go. Thank you. Is a manufactured home that's built to the HUD code, and it has different design elements in addition to the HUD code. So you'll notice that this particular home has an attached garage. It has a covered porch. We'll also accept that it has a dormer or a detached garage or carport. Choice Home has higher pitched roofs, and they're set on a low profile foundation or something that's more residential design. There's also some things on the interior of the home that you can see and some things that you may not be able to see. For example, some of the energy efficiency items, a programmable thermostat, insulation minimums that are often above the HUD requirements, as well as low E windows. Some of those items that can give the consumer the most bang for the buck from an energy efficiency perspective. But a lot of manufactured home builders now are building their homes to higher energy efficiency standards. And there are even some out there that create a net zero ready home that can be delivered on site and are very energy efficient. Now, for a home to be choice home eligible, that cross mod home must be at least a multi-section home with greater than or equal to 1,000 square foot of living space. These homes will have drywall throughout the interior to give it more of a site built or residential design and feature. Well, how do you know if a home is built to the HUD code versus being built to the modular code? So there's a couple of items that before that home leaves the factory and all the inspections are done, not only by the manufacturer of the home, but by third party inspectors on behalf of HUD who are there making certain that those homes meet the strict requirements of the HUD code. Once all those inspections are done and signed off on, there's a couple of items that are actually attached to the home. On the left, you'll see a red plate. It's called the HUD certification label. And this label is actually attached to the exterior of the home. And with the home being built in sections, each section of the home will have one of these labels on the exterior of the home. So if it's a single section home, there'll only be one. But if it's a multi-section home, it will be one for each section. So double wide will have two, one on each section of the home. On the interior of the home, there'll be a HUD compliance certificate, and that is the image on the right. And this provides a lot of information about the home itself, who the manufacturer was, the date of manufacturer, the floor plan and model, and all of the different elements that were put into the home. Anything from the heating and ventilation system and those components to microwaves, washer dryers, refrigerators, and gives information about that home. You also notice a couple of different maps. Each the HUD code is broken down into 3 zones, and that home is actually built to one of those 3 versions of the HUD code based on where that home will be delivered. Uh, if you think about it, a home that is constructed in a place that it's going to reside, like Texas, is going to be a lot different than a place like North Dakota. So in North Dakota, they need to make certain that their construction design and codes can withstand the colder temperatures and the roof loads of the snow. Where in Texas, they may not have that roof load due to the snow, but there's some other things that they need to take in consideration, such as the heat and humidity that happens in Texas. So each home is built to where it will be delivered to and set up for installation. In addition, if that home is located in an area that is prone to weather related events due to wind, there is a wind zone map. So that home is built to withstand certain wind loads due to natural disasters, etc. So if you think about that, a home built in Florida is going to need to withstand the natural disaster and the wind speeds of a hurricane versus perhaps one that is in Missouri that may not. So those are two of the items that you'll see to identify that it's a HUD code home. And to prove that it's a choice home, the manufacturer will place this label on the interior of the home near where the HUD certification label is, or the HUD data plate is located. And this indicates that that home is eligible for choice home financing. Um, so those are some items to look for in the home itself. And we ask that our lenders have the appraisers take pictures of these labels to make certain that the home is a manufactured home and meets those requirements. So let's talk a little bit more about manufactured home eligibility for HeritageOne. First and foremost, the home must be classified as real property under applicable law. So the manufactured home will have a title when it's comes out of the factory facility. In the title needs to be converted to real property under applicable state law. This is no change for HeritageOne that we require that manufactured home to be titled as real property, that the wheels, axles, and towing hitch be removed from the home, and that any structural modifications that have been added to the home must be approved by a licensed professional engineer or the local, state, or federal authority. So a lot of times I get questions about, well, they just attached a carport to the home. Why do we need to go and have a licensed professional engineer look at that? I sat in on an appraisal course where the Appraisal Institute instructor was teaching about manufactured homes. He is also an expert witness and testimony in the court of law for FHA. There was a loan where the lender did not require this inspection, and a high wind shear storm came through that area and lifted the carport up. And because it was attached to the home, it actually removed the roof of the home. Now, if there was a engineer's report, it could have caught that from a safety and soundness perspective. So a lot of things that we do for a reason. It's to make certain that that home is safe and sound and will be sustainable. So I talked a little bit about real property, and I teased about the three different methods that can be used by the states to convert that title to a real property. So there's three approaches to doing that. One is a non-certificate of title state, one is a certificate of title surrender state, and one is a certificate of title state. So in the non-certificate of title state, the homeowner would prepare the documentation according to the state requirements and send that to the state, and then will receive notice that their home is converted to real property. In a certificate of title surrender state, in addition to filling out that paperwork, they actually send the title to the home into the state, and the title is then retired or surrendered. So that home then is considered real property. So the title is no longer relevant. And in certificate of title states, not only do they file the mortgage on the property, but they file a lien on the actual title to the home and send that back to the lender as well. So keep in mind when we were talking about the leasehold requirements earlier that we require a HeritageOne manufactured home that is on trust land and under that leasehold be in a certificate of title surrender state. And then we require documentation in the mortgage file that that home is legally classified as real property, the home is properly titled, and the lien on the home and the land have been properly created, evidenced, and perfected. So that's a lot of information about titling the home, and hopefully we were clear on the requirements for when that home is on a leasehold. So let's talk a little bit about the actual underwriting for manufactured homes. First and foremost, uh, a manufactured home must be submitted to Loan Product Advisor, so LPA. You can manually underwrite that home, but it must go through Loan Product Advisor first. If it receives a risk class of accept and the term is greater than 20 years and the LTV TLTV ratios are greater than 90%, keep in mind for a manufactured home, it's 95% for HeritageOne and 97% LTV for a choice home. So you run it through Loan Product Advisor and you receive and accept, you're good to go. For those loan terms that are less than 20 years and the LTV is less than or equal to 95%, again, if you can receive and accept, but you can manually underwrite that if the risk class is caution and received an evaluation status of invalid, ineligible, or incomplete. So if you receive that accept, you would follow the Loan Product Advisor findings. But if you are manually underwriting that, we do require a 680 minimum indicator score and a 36% debt to income ratio. For manufacturer homes on a leasehold, it must receive a Loan Product Advisor risk class of accept. We do not permit the manual underwriting of a manufactured home on a leasehold. And this is true for HeritageOne as well, since depending on that ownership of the land structure, if it's on that trust land, it becomes a leasehold. So those must be Loan Product Advisor accept. For choice home, again, those must be run through loan product advisor and must receive a risk class of accept. And we do permit choice home on a leasehold, and it must receive that risk class of accept through loan product advisor. And as Kim mentioned, that loan product advisor really gives you that certainty as a lender that when you sell that loan to Freddie Mac, that it is a good, solid loan and that you've met the requirements from a credit risk perspective. So let's talk a little bit about LTV ratios for manufactured homes with HeritageOne Mortgage. For an accept mortgage secured by a manufactured home, that 95% LTV and 95% TLTV. But when it's a choice home, remember choice home were those manufactured homes that go above and beyond the HUD code and have certain design elements that make it more site-like. We permit up to 97% LTV and 105% TLTV with an affordable second financing. An additional benefit of choice home is that we provide flexibility in the appraiser to allow them to compare that choice home to site built homes. For manufactured homes on the appraisal, we do require 2 of the 3 comparable sales to be manufactured homes. Uh, so on a leasehold, I think we already talked about you have to have that loan product advisor accept. We have the 95% and 95% LTV. For a single section manufactured home, it's 95% LTV and 95% TLTV. Non-accept mortgages secured by manufactured homes with terms less than or equal to 20 years will permit a 95% LTV or a 95% TLTV. And a non-accept mortgage secured by a manufactured home with terms greater than 20 years, we do limit that to 90% LTV and TLTV. Keep in mind, as Kim pointed out earlier, for HeritageOne, it must be a primary residence. You can have a non-occupying co-borrower, but it is a primary residence. So you notice there's nothing that addresses a second home or investment home because those would be ineligible. So Kim mentioned some of the appraisal requirements for HeritageOne, and I wanted to be specifically clear on how we treat manufactured homes when they are on tribal land with our HeritageOne mortgage offering. When sufficient comparable sales are available, the appraiser must use the sales comparison approach for the opinion of market value. But you may have heard Kim say that sometimes finding comparable sales is a difficult challenge on tribal lands. So when comparable properties are not available, we do allow a cost-based approach when determining the value. So that's something to be aware of and something that we try to educate appraisers on. And maybe that's something in your letter of engagement to your appraisal management company or your appraisal board. You make certain that you highlight that this is a HeritageOne mortgage, it's on tribal land, and that there's special requirements for that if they cannot come up with sufficient comparable sales. Now, if that home is on a leasehold mortgage, right, on the tribal trust land, if no ground rent is due under that lease agreement and no upfront payment was made, the leased fee value is 0, and the appraiser would provide no value attributing to the underlying land. So it would truly be just the value of the home. And if an appraisal is obtained, it must pass the Freddie Mac provided offset to the borrower. Kim mentioned that appraisal credit that is received. So that must be passed through to the borrower because we know, as Kim mentioned, sometimes getting appraisers out on some of those tribal areas that are more remote can be a challenge. So we provide that to offset some of those challenges in the area. So Kim, I know we talked a lot about the underwriting of the home, what's required. Are there certain servicing elements we need to be aware of as well?
Absolutely. So we have two servicing options. One is our servicing, but servicing retain is the lender retains the servicing. So they do the origination, they retain the servicing for the life of the loan. The other option is servicing release, where the lender transfers the servicing to one of our approved Freddie Mac servicers. Now, that is two different options because some lenders do not have the capacity or maybe just the want to retain the servicing for the life of the loan. They want to get paid up front and have that liquidity sent back to them so they can make another loan and not have to worry about the servicing for 30 years. So both avenues are definitely accepted under HeritageOne. There are two different sets of terms, but I will say if you are looking to release the servicing, we have an approved servicer who is familiar, who is contracted with us to service HeritageOne loans for the life of the loan.
So that's great information and gives options to the lenders out there, whether they want to retain the servicing or they want to release that servicing. And we know that servicing has a lot of options to provide customers in case of what I like to call life event happening to them, and maybe they need some assistance. And I think that's where some more of that home buyer education comes in, and having access to those counselors can help them through that process. But what happens with a Heritage One mortgage if foreclosure is unavoidable?
So, and that is very important to highlight from those options because one of the things with being released is you don't have to handle the foreclosure or the what ifs or the in case, because as we know with servicing, there are a lot of rules, regulations, and procedure you have to follow. But in the case of foreclosure, if it is unavoidable, servicers have to complete the required communication, notification requirements, which they already do. It's nothing different in that regard. The necessary contact information for the tribe has to be obtained for servicers and Freddie Mac to work with those tribal contacts to really operationalize and the additional servicing requirements, which may be to work specifically with the tribe because they will be able to have first right of refusal. What that means is that the tribe has, in accordance with the mortgage documents, has the right to either refuse or to accept. You can do foreclosure proceedings in a tribal court. They can request that you go to tribal court. One thing on that right of refusal, a tribe can also purchase the home being foreclosed instead of going through the foreclosure process. In that case, the tribe could decide to allow the homeowners to stay in there and they could rent it out to them. They could sell it, similar to what HUD 184 has regarding foreclosure proceedings. But it is important to note that there are very, very real implications and very real reasons why we have first right of refusal, because we want to leave that power in the hands of the tribe on the land that is clearly their own. So when working with the lender, they do have to have a pretty solid relationship with the tribe, the tribal authority who is there, tribal courts if they so choose. And again, that is one of the caveats of retaining servicing, is that you will have that that in your wheelhouse.
And that makes sense, right? So if you have to be a tribe member to be able to live on the allotted land or tribal trust land or the fee simple land, that the tribe have that right of first refusal. That way they could continue home ownership and preserve ownership for tribal members, whether it be that same customer who lives in the home or whether they can make that home available for someone else. So I think it's important to recognize everyone that took their time out of the day to join us today, Kim, because without them, we couldn't do our jobs, right? We interact with the some of the different tribes, the tribal coalitions, tribal housing authorities, tribal housing designated entities, but we can only do so much. We need those lenders in that space who can reach out and work with those tribal members to make certain that home possible is an option for them on tribal lands. And I'm certain we have a lot more information available about our Heritage One offering. So, Kim, maybe do you want to talk a little bit about some of those items?
Sure. So one of the ways you can offer HeritageOne to your borrowers is being approved for our term of business. HeritageOne is a term of business. It is not just a general guide offering, what we call just our general offerings. You have to be approved. There is an application, and the application is really to make sure that you're familiar with tribal lending, to see if there is a gap in your knowledge base or what you've been doing. Not necessarily so we can say no. It's more of how can we say yes? How can we help you to get to the point where you are approved and know how this particular product can fit within what you're already doing, or if there are gaps where we need to help you connect some dots. You can also make sure that there's a tutorial to, once again, make sure that you have all of the information and knowledge and know-how to have tribal lending experience, to make sure that HeritageOne is offered in your particular shop, and you have the education and knowledge base to offer that to the homeowners. And also, we have our customer support contact center. All our lenders have a assigned account executive who is in charge of your account here at Freddie Mac, and you can always just contact me as well if you need more information. But the first way is to be not only a Freddie Mac approved lender, but to have the term of business approved, which would come with an application, education, and basically contacting someone who is assigned to your account here at Freddie Mac.
So, Kim, you mentioned earlier that we have to make certain that the borrower is a member of a federally recognized tribe. Do we have any tools that can help our lenders identify which tribes are federally recognized?
Absolutely. So here we have a map from the Bureau of Indian Affairs. It's a tribal leaders directory. It's an interactive map, so you can click on the dots, and it will tell you all the information on the tribes and who to contact, how to contact information, emails, phone numbers. But also, I think it's a good reference tool so you can see who is close to your lending area, or who may be someone who is within reach. Because what we have found is that you may have a tribal area next to you, but you've just never had any experience with that tribe. So it's a really good way to see who do you have in your network, or who do you have very close to you that's within reach to offer this product.
And Kim, you and I both touched upon getting an appraisal can be a challenge. But I think this is something that we're trying to help educate the entire ecosystem about lending on tribal land. Can you talk a little bit about the efforts that we're doing to help educate appraisers?
Absolutely. So we previously in our when we were creating this product, we noticed that there was a gap in not only appraisers who were familiar with appraising on tribal land, but education out there, so that if you didn't have that experience, that you could gain it. So we worked with South Dakota Housing Coalition and with the Appraisal Institute to create a curriculum for appraising residential property on tribal lands. And this is something that is available online. I think it's almost in every state, if not every state right now. It is very, very easy to navigate through, but it is an additional continuing education credit for appraisers, because um, the market has been pretty niche. It has been pretty small. There are very few appraisers who are familiar with appraising on tribal land. So this is a very, very easy way to gain that understanding, knowledge, and actually expanding your reach to be able to appraise on tribal land.
And I think this is a great tool for our lenders to have as they're looking to either heighten the awareness of their presence in tribal lands, or as they enter tribal lands, is to share this information with their appraisal management companies or their appraisal review board, who go out and assign the appraisals and do the appraisals, an opportunity for them to educate on what it means to appraise on the tribal lands. And we're in the 20th century now. We actually use QR codes, don't we, Kim? Where do these QR codes take us, and what's a little bit about each of these?
So a couple of things. I'll start actually on the right. We mentioned a lot about our home buyer education and how we want to educate our borrowers. Well, in some areas, of course, we would love to use the Native and tribal authorities and entities that provide that tribal counseling. and homeownership education. But there may be some cases where that's not available, or maybe they want some online resources. We have a great program called Credit Smart that has a plethora of information on home buying, on just general financial education. And the Credit Smart Homebuyer U is that education requirement. It provides a certificate from the course that will fulfill that education requirement for our loans. And also we have Native American homeownership preparedness. This QR code will take you to not only to homeownership preparedness, but it's a full list and almost a toolkit for homeownership preparation. And also the HeritageOne guide bulletins, there's a link there as well, because as we update, this is this is not a one and done type of program or product. It is growing, it is adjusting as we see the need. So any updates or guide bulletins or anything that happens on the product, the bottom link is a great way to make sure you're up to date and get that right to your email inbox.
That's fantastic. And I think we even have some additional resources, don't we?
We do for Housing Counselor Resource Center and our Heritage One webpage. Heritage One webpage, of course, will give you a rundown of all of the information we talked about today. It has great FAQs. It also has access to that native homeownership preparedness. Also, some other products that we have, because there is not a one size fits all. So there's a lot of handy links to tribal education and information resources and tools, and also our Housing Counselor Resource Center. So that is mainly for our housing counselors so that they have resources to supplement what they're providing to borrowers to educate themselves and things like that. I always say that plagiarism is only bad when you're in college. We want you to use our materials. We want you to copy. We want you to cut and paste, because that is why we do it. That is why we put it out there, so that you can cut and paste as needed.
That's fantastic. And as Kim said, we're developing more resources that we constantly put out on our mortgage product page, such as our Heritage One page. We have a whole team behind the Housing Counselor Resource Center that's working with that. And we even work with some outside agencies. For example, we're working with Next Step, who is a nonprofit out of Louisville, to take a manufactured home course that they developed several years ago and make certain that it is applicable to be used in the tribal arena. And they're working hard to make certain that they have that tribal sensitivity and the cultural sensitivity with that content. And I know they'll be out once they finish that and educating some of those tribal housing counselors on how to use that curriculum for manufactured homes. Because it's a little different to buy a manufactured home from a retailer versus a site built home, where you would either buy one that's already in existence or perhaps in a subdivision, or sit down and talk to a builder to have that built. So the blank slide means we're coming up on questions. I think we have about 4 or 5 minutes left. I see David. Thank you so much. Has been behind the scene answering some questions. There was one question, Kim, outstanding. How does a lender become approved to use the Heritage One product offering? And I think we had a slide on that.
We did. There we go. So if you're first and foremost, if you are a Freddie Mac approved lender, you can always just contact your account rep and they will give you a play-by-play, a step-by-step of what you need to do. But also you can just fill out that application. You can look at it, make sure you're familiar with all the things in there. You have any questions, you can call our customer contact center, or you can just email me and we'll get you to the right people. But absolutely, if you have contact with your account executive that's here at Freddie Mac, that would probably be your first contact.
Fantastic. So hopefully that answered the question that Sabrina asked in the chat. One question came in about, um, does Freddie Mac do personal property loans on manufactured homes? So currently, Freddie Mac does not offer personal property or home only financing for manufactured homes. So remember when we talked a few slides back about the three approaches that a state can allow the title to be converted to real property. In some of those instances, the state may refer back to the tribe saying that the state has no authority because it's on sovereign land. If that tribe does not have a mechanism then to convert that to real property and evidence that, that would be considered a personal property or home only loan. And Freddie Mac does not purchase those home only loans or manufactured homes as personal property. So it would be ineligible for Heritage One financing. So that was a great question as well. I think David answered any other questions in the chat. Kim, any parting words before we turn it back over to our producer, Eric?
No, I'm just grateful that everybody's in attendance today. I'm grateful for the just the interest in Heritage One and manufactured, because in this environment of high home costs, of lack of accessibility, a lack of supply, I think this provides a real avenue to not only expand business avenues, but to provide a real solution for homeownership at affordable prices that has not been there before.
Thank you so much. And while you were wrapping up, another question came in and said, based on the slides for MH, it sounds like a tribe has to adapt the state laws. Is that correct? I think that it's an understanding between the tribe and the states, more so than the tribe adapting to the state laws. And sometimes the state may recognize the sovereignty of the tribes and refer that back then to the tribes. So that's a great question that you brought up, Deborah. But to Kim's point, if we can make a difference, let's do it today. And all of you are on this call because you're difference makers. And together we can make home possible for our Native Americans on tribal land. So thank you so much for joining today. And with that, we'll turn it back over to our producer extraordinaire, Eric Sanders. Eric?
All right. Thank you all for joining us today for this informative session. We hope you found today's discussion valuable and insightful. I want to say a special thank you to Kimberly and Dennis for sharing their expertise and highlighting the impact of Heritage One. Listen, if you'd like to keep in touch with us or you'd like to address additional questions you weren't able to today, please reach out to us. We'll be happy to follow up with you soon to ensure you have all the information that you need. Thank you again for your time and participation. We look forward to continuing this important conversation and partnering with you to advance home ownership in Indian country. Have a wonderful rest of your day.